Welcome. My name is John Novak. I'm the developer and CEO of Nexgen Software Services. And what I wanted to do today is I wanted to walk you through my personal trading plan. On our website, in the educational page, we start you off with a plan. We don't want to write the whole thing for you, but we give you a lot of direction on where to go. And as you start to learn, you'll start to fill in some of the blanks on what you will require to do a trend trade and what you will do to take these other types of trades and what you will do to manage your trades. Again, what I wanted to do in this video is take you through my plan and show you my rules, my pictures, my trade setups, and just give you an idea of where you're going to progress to as you spend time with the software. And we can talk about making money and how much money you can make and all that fun stuff, but you have to really look at the market from the perspective of your trading plan, because when you look at the market, there's a lot to watch and there's a lot of stuff going on, but it's not all yours. And until you have your own plan, you won't be able to focus in on the things that are going to make you money. So I'll walk you through mine, and then we'll take a look at some example trades. I did a little bit of replay, and we'll put that after walking through the rules so you can kind of see how everything falls together. So we'll start off. Shock, I know. Rule number one is 5-1 trend trades. And I literally use the exact same rules that are in the manual. That's it. I mean, there's no magic to it. It's just you have to wait for the right setup, and then you just do the trade. Strong triggers on the large chart. And I wrote large chart because it doesn't matter what chart you use. Everybody, we start you off on a 13-2, 5-1, 8 range, which is a very good starting spot. Once you know how to read the chart successfully, your large chart may be different from somebody else's or from mine. And we're not telling you what chart to trade. We're just saying you have to have a large chart, and then you have to have room to your target, and you have to be able to ascertain whether you have enough room to actually make the trade worthwhile. Check your divergence. Doesn't mean skip the trade if there is divergence. And if you need to, wait for a signal. Personally, in my plan, I don't really do any trades that I have to wait for confirmation, very rarely. But we'll take a look at this stuff. Instead of an 8 range chart, I use a 13 range chart in addition. I'll run the 8 range and the 13 range. So here's basically what it looks like. 8 range on the right hand side, right? You guys are familiar with that. This is the Ninja 8 version. Trend trades on your 5-1 chart, and then the addition that I have is a 13 range chart. And a 13 range chart is very similar to a 21-3 chart, which is not shown here. I have a 13-2 here, but if you built a 21-3 chart, this chart and the 21-3 chart are very similar. The same way the 13-2 chart and the 8 range chart are very similar. The 13 range and a 21-3 chart are very similar. It's Fibonacci, so 13, 21, 34, 55. One chart's triggers are very similar to the next Fibonacci numbers up. That's just kind of the way we've set up the software. The real easy, super short version for me is this statement up here. When the price bars, literally, I don't care about the dots and the colors and all the bar itself is completely above the triggers, I'm going to do trend trades on the 5-1 chart. That's it. I mean, literally, you have strong triggers, price bars above, strong triggers up, and do trend trades. And we'll take a look at a lot of trades, but there's going to be a bunch of these that you'll look at and say, John, you can't do a trade. There was stuff you ran into. And then I'll say to you, are you sure? Because when you look at it, we break through areas sometimes. And, this is where confidence in the strength of the trigger lines on all of your charts is going to enable you to trade into these areas. And you'll be able to make a whole bunch more money than just waiting for, anyway. You can trade into fibs if they're going to break. And that's where, when we get into the website and you look at things like, let me get out of this real quick. When you get into things like chart reading, when we talk about our plan, I think probably one of the best videos I've ever done, smartest videos I've ever done, is this Trading the Edges video, tops and bottoms. I did it a long time ago. So when you watch it, you're going to hear 14.2 chart, and we don't use a 14.2, we use a 13.2. And you're going to see a little variance in the trigger lines. But the concepts are so important in this video that I think for trend traders, you have to really understand what's in this video on the chart reading page, or you're going to have a difficult time with trading into fibs and things of that nature. But learn that video. We'll get more into that. So again, look, this is an example. And again, look, it's still the same 5-1 trend trades. I just have a 13 range chart. No big deal. Another example of the correct side of the 13 range small triggers plus wide triggers on a 21.3 and or 13.2 chart. So we'll take a look at my picture and you guys can tell me what you think. All right, when we look at a 21.3 chart, the triggers are up. Again, this is my best trend trade, doesn't have to be yours. 13.2 triggers are up, and then I do a pullback into mid-bands, fibs, 1-to-1s as my 5-1 trend trade. That's it. And again, look, on the 13 range chart, price bars located completely above all of the triggers and the small triggers going up strong. And again, I like to get as close to the small triggers going up as I can. Usually it acts as a springboard in conjunction with whatever areas on your 5-1 chart. And typically things work out really well when every trigger on every chart is going your way. And that's the short version of my trading plan right there. Again, one of the things that's in this last picture that we just looked at, let me just pull it back up. And you'll see this a lot. You're going to see this over and over, and you'll hear it over and over, but it's, this is the one that's, it takes a minute to digest, and it takes a minute to get used to the concept. Because in the very beginning, we tell you if there's divergence up top, you need to wait for a market flow signal. And what that does is it adds in a layer of protection for the new trader. But, when you have 5 charts that all point up, you don't really have to wait for confirmation. You have to get in and hope to God it works. That's the short version. Usually it does. So again, the next line in my trading plan says ignore 5-1 divergence by comparing the small versus large trigger line configuration. So, I made this picture for the class one day. I thought it was a really good picture, so I put it in here. After I check 13 strong triggers are true and room to target is true, I check the 5-1 small triggers and I say, where are they in relationship to the large triggers on my 5-1 chart? And if I have divergence, if the small triggers are above and outside of the large triggers, you just take a trend trade, take a trend trade, take a trade, take a trade. So until you run into something that's going to cause issues, or you have divergence with the triggers inside of the large triggers, that's where we get reversals. So again, I spend a lot of time ignoring divergences that are outside the triggers when all the triggers are up and the small triggers are located physically above the 2 large triggers. So I thought this was a real good chart. I think it will be very helpful to a lot of people. All right, let's take a look at some more. Do not trade when the area is on the wrong side of the 13 range. Large triggers and the 5-1 charts disagree. This one's pretty straightforward. Let's just look at it together. I'll blow it up for you. So the idea is, do I want to trade long if the support area is literally below the large triggers, even though they're going up? And the answer is no, I don't. And it doesn't really matter because the small triggers are way below everything over here, and this is just not going to be a trend trade setup. And it's not anyway. If you just look at your small, to do a trend trade on the 13-2 chart, 5-1 chart, 13 range chart for that matter, the small triggers have to be going up on the 13 range chart. If the small triggers are going down on the 13 range chart, it's not a trend trade. So, I mean, that's pretty easy, pretty straightforward, but again, bad trigger line configuration, not going to be a trade. And then I put in the aftermath, how it went down anyway. If you did take the trade, which you shouldn't, you can see it went down. This was the after. Pretty straightforward. Now, this is the one, you know, and again, look, I think when you start trading the market, it's a little bit frustrating when your exit logic takes you out. And what I mean by that, let me show you just, we'll kind of go to exit logic. So for example, if you're long and holding on for dear life, a second lower divergence is going to take you out of your trade. Or if you're short, a higher divergence, higher than the last, is going to take you out of your trade. So it's just management logic. This frustrates the hell out of most people. And the reason it does is because you know there's going to be a big move and you're going to miss it after they take out the higher low. So we've always had some form of continuation type trade. And I'm going to tell you honestly, as a new user, you don't have enough skill reading the charts to be able to take advantage of this initially. You will. So again, keep this in the back of your mind for later. But again, you must have a strong trend, not to a Fibonacci target, usually a pivot from nowhere. You'll hear us talk about that a lot in the educational room. Continuation of the trend using key Fibonacci areas. And, you know, the idea behind this, and just to show you a picture, this is the old picture from March 2021, but can't get much better. So this is the 13-2 chart, and you know, the trend ends and kind of gives out. You're like, God dang it, I thought I was going to be rich. Thought we were going to make it to the fibs. And what happens is a lot of times we'll put in a deeper retracement after a pivot from nowhere. And what happens is if you go to a larger chart like a 21-3 chart, you'll say, wow, this is the perfect look for continuation to the upside. So this is what you want. It's not as much a counter trend trade as it is a deeper retracement in an existing trend as defined by larger charts. Now, you may not be ready to use larger charts yet, but rejoice, you will, I promise. Usually comes a few months into it, so as you're reading your charts and you're getting better at what you're doing, you will get to this point. And again, look, you need to have a strong trend. Do this with the trend, not against the trend, especially initially. So here's the entry logic for a continuation trade. It's really simple. The first things first, you have to be able to say we should go up and we should go up to here. And if you can't say that confidently, then you can't do a continuation trade. So it's really important that you're able to define this. And usually continuation trade comes after a trend trade loser. So you almost always have to lose. You don't always, because sometimes second divergence takes you out, but many times the market's very mean and you're gonna get into a trend trade, like right here, and they're gonna stop you out below the 1-to-1, and you're like, God dang it. Right? So you can see how that would happen, right? I mean, if you were at the right edge of the chart, you'd be like, yay, a trend trade, and then you'd be like, oh no. Anyway, long story short, they usually go to where they're supposed to go anyway. And, you know, the logic's really simple. Wait for the 5-1 small triggers to roll. Wait for support and the small triggers, whether it's a 1-to-1, a mid-band, or a blue fib. It doesn't matter what the support is. Same rules as a trend trade. And the small triggers are together, and then get in and hold your breath and hope it goes. And if it does, then, you know, again, look, when you got in on this trend trade over here and lost, you anticipated it was going to go up to, you know, 42.52 to the red lines. So you were going to make, you know, 8 points, 9 points on the S&P. Instead, you lose 3 points, and then you get a second chance at it, and then you get the rest of your money as long as you're patient and you hold on. So, and again, there's another trend trade over here, but this is the one over here that pays 3 or 4 points better than this one. And again, you have to kind of hold through some of this smaller chart stuff to get to the promised land. Now, on our trading plan, here, let me show you on the trading plan here for just a second. And I think I have this later in my plan, but I'll just show it to you now. And we've already talked about it once, but you have to have this video perfected, period. If you can't say 100% for certain, you have a good top, bad top, where you're going to and why, you're never going to be able to do continuation trades very well. So again, there's another video, excuse me. When you watch this video, you'll see that the video is technically predicated on the continuation logic. So let's say you wanted to get long and the small triggers are going down, you can get long after the small triggers roll up and you have support. And this whole video talks about this the whole time. And you'll see that in the trend analysis, is the market going up or down. But that's the video that explains whether the fibs are going to hold or break, but it also explains my continuation trade logic. So watch that video again. You're going to really appreciate it. And again, just to kind of get back to that picture, traditionally it's either a trend trade you had to manage out of, or, and again, sometimes they stop at 1-to-1, sometimes they go to fibs. Most of the time it's not in the middle of nowhere, but sometimes that happens. It's important to make sure that those 5-1 triggers are going back up. Now, let's take a look at the next picture. Again, this is a picture I had in plan for a long time, but you know, this is the same logic. So I know there's a lot here, but so watch. Let's look at this yellow one down here at the bottom. This is the pivot stop out that has small triggers inside of the large. That divergence is going to take you out of your short trade, right? So you'll be short and then you'll be like, darn it. But you know, you won't lose any money. And then you're like, I know it's going down. My 13 range, my 13.2 mid bands and fibs, my 21.3, everything says we're going down. I want to go short, darn it. And you know, a lot of people make the mistake of going short here, only to get run over, lose money, and then it goes down anyway. So the concept, without reading all the words, is simple. Wait for the small triggers to be going down, pull back to some type of area, mid-band or fib, and then you get your short trade you wanted. This short trade almost always happens, not always, but most of the time it's either at a higher area so you can get a bigger running head start, or at the same area you did your first trend trade and you just get the money that you were anticipating the first time. So this is a real good pickup for, you know, the trend trades that fail, but the market goes anyway and you don't have any other way to get paid for it. So look, here's another example of the same thing. Market's going down, you're going to sell the midband, no doubt about it. You're going to recognize a higher divergence that closes above the triggers, and the small triggers are inside the large, so you're going to get out. So no harm done. And then you're going to be like, oh, I wanted to go short, and it goes up to a fib. And instead of trying to sell the fib, which could break when the triggers are going up, you're going to wait for the triggers to roll over, and then whatever happens over here, you're going to get short and then take it to the downside. This is actually Ethereum 5-1 chart, 500, 100 chart. But the logic is literally the exact same no matter what market you trade. It doesn't matter. Trend trade that fails or loses, continuation trade that gets all your money back, plus, plus, plus. Continuation trades are big ones. You can't take 10 ticks and 20 ticks because you're going to really be pissed off when it goes all the way down here. So think big money if you get one of these. That's the thought process behind it. All right, let's keep going here. If both the large triggers on the 5-1 are strong, wait for momentum to shift by using trigger line direction. So what does all that mean? It means we had a good top on the 21.3, we had strong triggers, and this is traditionally what happens. You pull back to the mid-band on the 13.2 chart, and you're like, oh, I know we're going down. And you get two chances at it, right? The first one is up here at the 1-to-1, where the small triggers roll over, and it pulls back to them, and then you go short. So, this one's optimal because it's really close to the top, and you make a lot more money. If you want to add in a second layer to it and say, I'm not as good about that, wait for the small triggers to get below the large triggers, and then you can sell a pullback. That's kind of a, this is I wouldn't say any of them are safer than any others. You still have money at risk. But this one is a little higher probability than the one that's above all of your triggers going up. Personally, I like this one. I like 1-to-1s, or I like right at the fib. But if you use the secondary one, it's just going to be okay. And again, as long as your other charts are green, 8 range or 13 range triggers going down, makes that trade a whole lot easier. Now, let's take an example. Here's 2 continuation trades. I had these the other day. I didn't have my markers on, so I can't show you the first one, but I knew it's going up, and my rules are really simple. I want to revamp the rules for you one more time. You ready? I need a 13 range chart reversal bar on the market flow, plus the 5-1 triggers are crossed over. That's the rule. 13 range signal plus the 5-1 triggers rolling. And what it does is it keeps me patient. So over here, let's take a look at the 13 range chart first on the right. We're going up. We're at the big triggers. I know we're going up. Every chart says we're going up. So I get a signal, antenna bar. I'm looking to buy a pullback to get up to the fib. So this is the small triggers rolling over here, which, there's not a lot of support there, but the triggers will work by themselves if they have to, depending on the quality of the signal over here in your market flow chart. The second one I like a little better because they hit the fibs. The small triggers roll back above all the fibs and made a really better. I didn't get a very good entry there. I paid a little extra, but I didn't want to miss it. And this is the one, and we were expecting to get to 4209.50 plus, and it did actually get there. So we're talking about 15 S&P points. Take half at the first area, and then anyway, needless to say, this is how you get some of the very big trades, and I use this same logic at tops and bottoms to go the other way. If 3 or 4 of my charts all have termination conditions at the exact same time. So it has to be really, really, really specific for use at the top or bottom. Anyway, needless to say, that's a couple examples there. And, again, I think I've got another one here. There's one more that I have that, again, we talk about the trend ending and we're going to make it to the mid-band and fibs. Well, if you get a 5-1 trend trade or something that looks good after divergence, so trade down to the continuation area, and then if you get long signals, you can trade off of it. So you get the best of both worlds. So if you have, only if you have divergence with weak triggers, and the small triggers roll over, and you get a pullback, and the 5-1 chart agrees, then you can go short to the mid-band and fibs. And then if the mid-band and fibs hold, you can get long and get the rest of your money. If they break, you probably won't get a continuation signal. It'll get through, and then you can continue on with trend trades. So you're kind of preparing yourself for both scenarios. Trading to the continuation, if it gives you a continuation, go long. Trading to the continuation if you get a signal, and if it never gives you one, continue taking short trades. So you're always open to whatever the market is suggesting to you. So, again, trading to the continuation area, those are the trades you manage pretty tightly because you're kind of trading against the trend. Now, high volume area trades. Same thing. I mean, look, the rules didn't change from the plan on the website. You have to have termination, right? And, 8 or 13 range high volume lines. Doesn't matter what chart you use. I had a 90-second chart in some of my examples, but it doesn't really matter. If you have a good top and you've got good reasons, use the high volume line to help you out. I mean, that's the trade. I didn't make up anything new here. There's not much to talk about. We can look at more, but it's the same thing. If a high volume area helps with trend trades, great. Right, so this is my 13 range chart on the right. So price bars below all the triggers. If I have a high volume line, I'll use the high volume line here if it lines up with trend trades on my other charts. That's all I'm saying. I'll use it at the top or bottom if the top or bottom is really good. I'm talking multiple chart terminations, weak triggers, things rolling. That's the way to use it at the top or bottom. In the middle of the trend, it's still pretty darn helpful if it lines up with a trend trade. There's not much to say about that. If you do use multiple market flow charts and you end up with market flow high volume lines in the same spot, usually that's pretty good as well. So watch those areas. If you only use one chart, it doesn't really matter. It's at the same spot anyway. So semi-redundant if you're only using one chart. And then this is the second version. Again, it's basically saying the same thing. You have a pivot stop out, trend trade, high volume line, kind of stacking the deck here. But, was it needed, the second one? Not really. You're going to do that trade anyway, right? Now, that's it. So that's my whole trading plan for entries. 5-1 trend trades basically right out of the book. High volume area trades right out of the book. And the only exception is the continuation trade if what? What has to happen? Remember? Strong 21.3, strong 13.2, signals, small triggers rolling. Really nice addition. Now, chart reading. I wrote the rules out, and you guys have a copy if you want one. The exception to rule number 2, which is no trading in termination conditions, happens when there's a great top or great bottom, combined with strong 13.2 trigger lines. Now, I put it on here again. I've already said, this is probably one of my favorite videos that I've done. Trading the edges, tops and bottoms. This video will set you free to do a lot more trades than you're going to see in the initial. And again, I want you to learn that page, learn that video, and This is going to apply to things like 50-50 trades. And, we talk about it in the class a lot, but 50-50 trades are small triggers below the area, large triggers above the area. You can take the trade, but you still just have to manage it. And then once all the triggers are helping the area, then it's a really, really, really solid trade. So you can start out 50-50 and then it kind of goes to 80-20. And whenever you have a 50-50, you have to manage that trade a little bit differently, right? You have to watch out for it. And if anything happens, you have to get out. And then obviously to take a 50-50 trade, you want a perfect look on your range chart and your 5-1 chart. If you don't have a perfect look on your smaller charts, don't do a trade. Pretty easy, right? Now, entering trades at the area. Here's the whole shooting match. Are you ready? If the price bars are completely above all of your strong triggers going up, have the courage to place your order at the area, close your eyes, and hope for the best. And it's really simple. Strong triggers with price bars above your small triggers. If you have a high volume line or a trend trade or whatever the hell your trade is, it doesn't really matter. Put your order in at there, leave your stop out of the way, and hope that the software does what it does, or the market follows suit with what the software says should happen. You will find yourself not scrambling for entries after a long signal. So again, price bars above, strong triggers, put your orders in at the spot, you'll be a lot happier. You won't have to wait for confirmation. Don't do trades that you have to have confirmation on. That's the easy way. That's what we were talking about here, right, on our trend trades. Price bars located very much above wide triggers. Get in at the spot and hope for the best. So you'll see that over and over and over in my plan. But it's moderately simple, right? So enter at the areas when price bars are on the correct side. Now, a couple of times you might need market flow confirmation, or you'll probably not get a signal. But if the market flow has two really strong down bars, such as yellow-white combo from the high, or stranded buyers and sellers plus a white bar, or two antenna bars in a row, whenever there's a strong market flow against you, you might say, let me just wait for a little bit of confirmation. And you'll get used to watching the market flow when that's going to happen. Whenever you have stranded buyers or sellers from the extreme, that includes divergence on the 5-1 chart, or divergence on the 5-1 chart with weak triggers on the 13-2 chart, you're going to want to wait for some confirmation. So this is divergence on the 5-1. And again, look at what happened over here. We had some stranded buyers, but we were very much above the triggers. Now, a second set of stranded buyers plus a white bar down, we may very well keep going, which we did. So you're going to have to kind of recognize the market flow bars on your chart and say, what's going on and what type of bar pattern do I have, and should I wait or should I get in right away? Again, if you notice, the first stranded buyers was above very strong small triggers. If you use the 8 range chart, you're still above strong small triggers. So if everything's above strong small triggers, you're going to get one more up. Notice that the 8 range chart is considerably below all the small triggers, and it kept on going. So above the small triggers, good. After stranded buyers, more stranded buyers, more sell bars, multiple sell bars below the small triggers, not so good. It's kind of like I'm telling you to trade on the right side of the triggers. You hear that? So, again, look, one of our clients, MB, is what we'll say, Studied this pattern for years and years and years, and I mean years. He's had the market flow since 2016 when it came out. And if all of your charts are good for a 5-1 trend trade, which we won't go through the rules, if the white paint bar is inside of the small triggers going down, you can usually sell immediately after the white paint bar up, and you almost always get a signal going down. The opposite is true if the white bar itself is completely above the small triggers. So this should start to have a pretty familiar theme for you. All the price bars below the small triggers, white paint bar up, go short, get paid. Price bars inside of and above the small triggers, not so fast on selling after a white paint bar up. See the theme? Trade on the correct side of the triggers. So when you have stranded buyers or sellers, you're going to have to manage those trades a little bit quicker. This is a very busy picture here. We'll start on the left. Probably the most powerful market flow bar that you're going to ever see is stranded buyer antenna yellow bar with divergence. I mean, that's pretty much the mother lode of all tops and bottoms right there. Anyway, if you do take a long trade, you're going to have to be very slick about it and probably manage it very tightly. Again, we don't look for trades when the price longs, when the price bars are below all of our triggers. We might look for shorts, but we're not looking for longs. And if the triggers are rolling and we're totally below our small triggers on the 13 chart going down, guess what? White paint bar up, into a fib, short, usually pretty good. At the bottom, look at the multiple bullish bars going up. So you have 1, 2, 3 in a row, antenna, stranded buyers, antenna, white bar. You might want to wait a second. Usually they end up going higher if you've got 2 or 3 strong bars up in a row. It's okay to wait. And then the high volume area holds and we go down, but notice, notice that during this whole push down, all the price bars are not below all the triggers. So they bounce around a little bit, but that's not that strong. And then ultimately you get, say it out loud if you know it, all of the price bars above all of the triggers. And lo and behold, the market follows suit and goes up multiple times. So below the triggers, resistance holds. Down triggers, trades work. Multiple strong market flows, hold your horses. After the second push down, be very careful if you don't get below all your triggers. If you get back above all your triggers, you're probably going the other way. Now, when, and again, this is a little bit more, if you use 2 market flow charts. I did a lot of study, and this is probably too busy for everybody, but if the 8 range and the 13 range have stranded buyers at the same time, the market usually goes down. If it has stranded sellers at the same time, the market usually goes up, especially when there's divergence on those pivots. So anyway, it's just a pattern that I recognized, and that's why, I use caution when there's stranded buyers or sellers in front of a trade. It's not that I won't take a trade if there's stranded buyers or sellers. I'll just manage that trade a little bit differently. So I'll take it to management here. So let me find it for you. So $200 profit target on the first half. I know that the plan on the site says 10, but I like to use 20 ticks on crude or 4 points on the S&P. So $200 first profit target. Then get to break even unless I'm trading into prior stranded buyers or sellers, at which point I'll take 3/4 of the position, 1 to 2 ticks before the stranded dot. And you'll see as the market retests stranded buyers or sellers, it either breaks it significantly or it reverses completely. There's pretty much nothing in between. So here, let me shrink this back down real quick just so I can see where we were. All right. Now, keep trading in the direction of the trend if, stranded buyers are not an evil thing, or stranded sellers are not an evil thing. If you have stranded sellers and the trend's going up and your triggers are up, take long trades. Just a thought. So you'll see this, this is double chart stranded buyers or sellers. And, again, it's pretty easy to see what the triggers are doing. And these are traditionally where the continuation type trades happen. So if you look at this second circle, probably past a trend trade, either lost or whatever happened, doesn't matter. And then it makes it to the farther area, you get a signal and you're buying a little pullback after the 5-1 small triggers roll and you're getting all the money. So with the trend, stranded buyers or sellers are extremely beneficial. So don't be scared of stranded buyers or sellers, just manage into them if you're in a trade, and then if they're helping you, really get after it. Now, I will say tops and bottoms are good to trade if, first of all, you know that video and you know what a good top or bottom is, and you know what termination on every chart means. And again, the entry uses continuation logic. So we're not inventing a new trade. We're not doing anything different. We're using the continuation logic after a good top. So there's one key rule that I have that keeps me out of trouble. The first top has the small triggers above the large. Then the small triggers get below the large. And then the next top is going to be a good top, which you'll see in that video. So after the triggers are below and you hit a termination, then you can look for one hop in attempt if you have fibs and mid bands and strong triggers, 1-to-1s, and then you get a couple extra trades after a really, really, really good termination on a chart that has the precursor small triggers weakening the large triggers first. Can't do it over here because it's just too strong. But the second time you can do it and get away with it. And this goes back to the video about good tops and good bottoms. If you don't know it like the back of your hand and you haven't looked at 1,000 examples of it, you're not ready for this. So just a fair warning. And then, really easy logic. $200 profit target. Technically, I don't move my stops a lot. I used to a lot, and man, it gets you in trouble so much. Usually I'll leave the original stop alone. I was willing to risk 3 points on an S&P or 13 ticks on crude, whatever, unless something changes, meaning divergence, triggers weaken, something gives out, just leave it alone. Now, once the markets move far away, like to first target or prior high or something like that, of course, move your stop up and get your risk to nothing. And you can, again, this is where I also use the 13 range chart to kind of help me with my style. I'll show you guys an example of that. And then look, relax. You have fibs, you know where it's going most of the time. Relax and get paid. You guys pay a lot of money for software. Use it to its fullest advantage. Trend trades are great, but you have to start adding in some of these other trades later. If you recognize, the reason we start you with trend trades is simple. They're perfect and everything's going your way and you have a good chance of making money. Most people get bored with it very quickly because you have to wait for an hour in between trades and it's boring. Or if you wait an hour and then take a loser and then wait an hour and take a loser, you get discouraged. Because especially if the market takes you out and then goes to where it's supposed to go. So hopefully this will give you a little bit of hope as to What's going to happen is you get better with your chart reading and you spend more time with the software and you're able to really stretch your legs and take advantage of what you can see on the chart. Again, this is super simple. Picture I had the other day from a trade I was in. Strong triggers, hold on. It says hold on. Strong triggers say hold on. Strong triggers say hold on. Strong triggers say hold on. And guess what? We made it to the fib, I think, and then some. So, you know, if they're going to give you all that money and there's no reason to get out, take that money. You'll make a lot more money than taking 10 ticks and 20 ticks. So, again, these are few and far between where you get the super monster just trend trade. But, again, these are the ones that if the market says take it, you get to take it. Again, look, same rules as what we teach you guys. Third divergences or 5-1 triggers on the wrong side or weakening on the other charts, get out. So, you know, any divergence with the small triggers and price on the wrong side is going to make the market keep going. Red backgrounds with divergence, you're going to get out, of course. If you hit a top, you can have a continuation, and then there's even more divergence, but you're already in. So, again, you can see the continuation on this last circle, can't you? The market said it was going to go down to a bigger target. They had a trend trade, took everybody out, continuation short. You'll start seeing that all over the place, so be careful. They're not always there, but when the big trend is with you, you're going to really like it. Exit with divergence when the small triggers are inside the large triggers, which is the same thing. This is the same picture right out of the manual. So if you're long and holding on, eventually a divergence is going to take you out that's lower, red background, right? So you already know this one from the educational material. Same thing, oops, same picture, sorry. And then finally, you know, I always watch for old high volume lines as second targets. So if you get a first target, you know, sometimes that second high volume line is a good place to watch on your market flow charts. And again, we're getting close to a 1-to-1 here too, so it's not a bad spot. Or even a first target there. But just be mindful of where the prior high volume line was. There's a reason it's there. It's because it made the market go up. So that was the price at which people were really paying to make the market go up. It's also a good price to take some profit. So what I want to do now, and I spent hours doing this, so hopefully this will be helpful for you guys. We're going to go through replay and go through looking at the market as it pertains to my trading plan and some of the practice work that I do on the weekend. You know, I do market replay too, and I study all the time. I'm no different than anybody else. I have to reread my plan all the time. This is good for me. This video is good for you, hopefully, but it's also good for me because I'm going to be trading during the week and posting charts in the room. And, you know, now that you guys see what I'm doing, you'll understand a couple more of my pictures. So I appreciate the time. Hang tight. Let me put the charts up, and then we'll do some market replay together and walk our way through it. All right, in this video, we're going to go through trades, trend trades, continuation trades, and high volume trades. What we see before us is a trend trade, and the reason why we will do trend trades, and you remember from our trading plan, whenever all of the price bars are below all of the triggers on the 13 range chart, and the 13 range small triggers are crossed down. If you're using the 8 range chart, this is okay as well. The 8 range large triggers and the 13 range small triggers are very, very similar. Slightly different, but similar. I prefer the larger bars on the 13 range chart. That's why I use them. It doesn't really matter what bar size you use. The most important thing is that you're consistent in your trading rules. So you'll see this This will look exactly like a normal trend trade that Nexgen teaches. And again, when we pick targets, usually 20 ticks. I know in the trading plan initially we teach 10 ticks and 20 ticks and get to break even. With the volatility of the market, I like to take a little bit more money. Also, if the triggers, small triggers on the 5-1 chart are getting weak, I'll get out with any divergence and I'll look for another trade. So there you can see we got divergence, and a lot of times when you get divergence, especially when there's a large spread on the large triggers on the 13 chart, they'll go back up there and kind of close that gap. So you have two choices. After divergence on the 5-1 and a strong market flow bar, which the yellow bar at the bottom was, you usually take out the high, which we just did. And there's two ways you can do continuation. If the 21.3 is really strong and you get to a 1-to-1 and a fib and it's expected to hold, you can use a stop order. And if the market gets above that 1-to-1 and then back below it, like we saw here, and once you have a pivot, of course, you can move your stop down. And again, this is only to be done when the 21.3 chart not shown, and the 13 range large triggers are also very strong. And the market's very good about stopping out highs and lows and then continuing with the existing trend. Usually a continuation trade allows me to have a larger target, typically at the Fibonacci area that the market did not get to the first time that we thought it might. So usually after they stop everybody out, they go right to where they were supposed to go, and thus giving us a much larger target. And again, if you only took 10 and 20 ticks on this, you'd end up being mad if they made it all the way down to the fib. You might not be mad, but you're not really using the software to its full capacity. The reason we have Fibonacci areas is so we can confidently and accurately define where the market's going. So we went from Fibonacci resistance, and we should go to Fibonacci support as long as, and you can see here, I'll start bringing down my stop above a 13 range high volume area on the prior bar plus a new bar up. That kind of allows me to pull my stop down, and I get my stops really tight as we start to get close to targets, Fibonacci targets like we are here. Usually they just finish the move pretty quickly. There we go. And you can see, look at the 13 range triggers. Strong down all the way. 13 range large triggers strong down all the way, and if you saw the 21.3 chart, they would be strong down as well. And that's, as you remember from the trading plan, part of the criteria for me to do continuation trades. And then now, again, we have really strong charts. This one is a very difficult trade for new traders to make. Because it looks like we hit fibs and then that's it. And it may be. Again, sometimes in a strong trending market, and we've had very strong trending markets lately, after two divergences, I want you to notice the location of the small triggers. As I move this stop behind a new pivot here, notice the location of the small triggers on the 5-1 chart relative to the large triggers. They're below everything. So typically you'll get one more down. Also notice what we got over here on our 13 range chart. You'll see, just my stop's above the high pivot here. You'll see a very nice bar over here. And again, now I can use, and I do use, my 13 range chart. As long as we don't make up bars that violate the prior high volume lines on the 13 bar chart. I probably should have been out of half right there. Again, these are the ones that, again, I'm still leaving my stop alone. I'm getting itchy here. I could have been out of half. But again, if we don't close above the prior down bar high volume area, we're not going up. And we might go up here. And again, this is one where I probably should have been out half at the blue line and then break even. So we'll see what happens here. I'll just leave it alone. And again, I like to go through the thought process. You know, these are the types of trades you look up later and you're like, oh my goodness, oops, sorry about that. The triggers are so strong, I should have stayed in. So let's just look at the 13 range chart. And again, look, I'll put it above where a new bar would form. Notice that the market resisted at the prior high volume line. And as we move our way down, we can move our stop down as well behind the prior high volume area and new bars. And you can see we got a larger first target. Looking at these triggers, it doesn't look like such a bad trade anymore, does it? All right, so another very good market flow bar down, which is awesome. So I click my stop and I'm ready to move in, assuming we get one more new down bar. So that's where it would go right there. Again, another new down bar. So I'm kind of trailing my stops. And now it's time to get tight. No reason to risk a whole bunch of money for one or two more ticks. And again, sometimes they bounce up and they get you. Oh, there we go. So we got our target. So, you know, again, these are the types of trades that for new traders are very, very difficult. Because we did have divergence at Fibonacci on the 5-1 chart. Again, the important part was location of the small triggers on the 5-1 chart. Which you see that a lot in the management rules in my plan and also in the educational material online. And again, that's just one of those that you have to, you know, you have to get used to first, and then a 21-3 chart strong down helps. So again, you know, just to kind of show you the concept, see how the prior high volume areas on this chart. So the triggers are past the fibs. I use the mid band on the 5-1 chart plus prior high volume areas of a down bar on the other chart. And again, this may not be the best trade. But again, because it's so strong down and the triggers are strong down, and you know, the other half of it is if my trend trade happens inside of the 5-1 triggers, I notice that the divergence on the low on the 5-1 chart, again, small triggers were very much below all of the large triggers. So whenever that's the case, you usually get one more push down. If there's no divergence on the low, better. But if there is divergence, you have to really pay attention to where the triggers are when that divergence happens. Now, we did have some stranded sellers at the bottom on the 13 range chart. Traditionally, this is where I should be taking my first target because there was stranded sellers and there are no triggers past the fibs, and it's too late now. Now I have a higher divergence, which is truly an exit, which I should be out. Anyway, does everybody see how there's a higher divergence the second time on the 5-1 chart? Yeah, I got bumped out. All right, so now let's do yet again another trend trade. And again, you know, with trend trades, you know, you can see, and again, I did this on replay, so I skipped a second there. So sorry about that. But you can see that second higher divergence really warranted an exit, and not to lose money there, but I did lose a little bit of money. And now we have our next trend trade. Now, the thing I don't like is an antenna, stranded yellow dot or magenta dots. Now, the thing I do like is the high volume line on the 13 range chart and the strong trend down. So one of those is going to win. We're either going to stop right here or it's going to keep going up and we'll lose this trade. You notice that we've also lost our trigger lines on the 13 range chart. So realistically, oh, there you go. You can see. Now, the 21-3 chart says we're still going down. So we had a loss here. Can't spell, but that's okay. And again, we're not going long. All the triggers are down on the 13 range chart. So this is another time where potentially we look for some continuation to the short side, where the small triggers roll over and we get a pullback into the mid bands and or resistance. As long as our 13 range triggers are down, we control our stops pretty tight behind this, because if it doesn't go, it doesn't go. And again, sometimes, you know, this is the what I call second chance of a trend trade. Very good example of continuation with strong small triggers going down at the fib area, the mid band, and all of the triggers remaining below the fib. So, you know, they got a little rambunctious, but obviously we're working our way back down here. And again, this is, you know, where you can start to watch a white paint bar into those stranded sellers and 1-to-1s and fibs. And I'm going to get real tight on this stop, because we have a pivot stop out on the 13 range chart. I mean, there's like 47 reasons why we're going to bounce from here, and we didn't, which is surprising. So then we start thinking, hey, let's get greedy. Oops, never mind, I won't move it. All right, so we got it. And, you know, again, do you stay in or do you wait for another trend trade short? And again, whenever you're doing trend trade shorts, I like to line up not only where my area is on the 5-1 chart, but I also like to look at what's happening on my 13. So you'll see we have a high volume line. Oops, I need to give up a tick or two. You know, you usually make it to that pink high volume line, which they did. So there we go. So you're not going to use that as a, where should I get my trend trade? Notice it was prior stranded buyers plus a high volume area plus triggers down, new stop after a pivot, and this is the do or die spot right here. Watch, this time I'll put my target at the previous stranded seller's dot, which is what I should have done that other time, but I didn't, but that's okay. And usually they retest the prior stranded sellers, which they just did, so which is perfect. And I'm talking about that magenta dot on the up bar right there. Now, a white paint bar down into that test gets me on my toes. So if we have another divergence up, notice my small triggers are now inside the large triggers. So hopefully we just go down to fibs. But I'm not going, because the triggers are getting a little weaker on the 5-1. You know, if we start going back up above the high volume areas, usually a white paint bar into a prior low, just it puts you on edge that we might actually get a little snap back up. Now we did, which is great. So now we're at the spot at 85 where we're going to be breaking above all of our triggers on all of our charts. And, you know, again, this is where, you know, I made a mistake, and I'm going to show it to you. I'm thinking I'm going to be the first one to catch the breakout to the upside. So I'm going to buy support and my small triggers on my 5-1 chart. Now, this is a mistake. This is not what I want you to do, but I want you to see what happens here where you get enamored with a couple of up signals on the market flow chart. Don't look at that. Look at the triggers on the market flow chart. Both triggers are down. This is not going to be a long signal. I did it anyway. I want to show it to you. And again, you know, it's easy to get enamored with, I got bumped out. This is a good long signal. Now, I want you to see the difference. Again, I took a bad one, and then this one actually has the small triggers crossed up on the 13 range chart, which is my rule for a trend trade. So I showed you a bad trade where I got jumpy trying to catch the bottom. And then I showed you one that actually had the rules met with all the triggers up, buying Fibonacci support, getting out at Fibonacci resistance. Much better results following the rules. Anyway, in living color right there. And again, I make mistakes sometimes. So when you guys, you have to go back and say, why did I do that trade? What was wrong? What rules did I break? And I'm guilty. I'll break a rule every now and then. I will admit it. And I either get caught up in the moment, or I get mad, or I try to trade twice, or whatever the case is. I'm human. Everybody's human. You're going to make mistakes. And again, look, the triggers are still up strong now. So I think we can take one more trend trade. And again, I know this is, again, one of the more difficult ones for new traders. So I want you to look at the bar itself on the 13 range chart, sorry. And I want you to look at the small triggers on the 13 range chart too. Here, look, I'll put a circle. See that? That is my rule for a trend trade long. It may lose, but they don't most of the time. So we'll try to retest the high again, which they'll do a lot. And notice I've got a pivot on my 5-1 chart. I can moving things around here, but I can start reducing my risk. There's no reason to have this much risk anymore. Anytime I got strong up. So again, I'll move my stop, and then the target. Remember, we talked about prior stranded buyers or sellers. So we got to the prior high plus the prior stranded buyers, the green dot over there. So that's a really good spot to take some money off. And with all the triggers up, we'll see if we can continue. This is, again, I like to leave my stop behind the prior bar's high volume area. See that? That would be inside of it right there. Usually I like to leave it below it, but we got a new pivot up on the 5-1 chart, which will allow me to bring my rules. Now we broke out. So let's do an add-on and try and make some more money if we get another trend trade. Again, this is perfect trend trade. Look now, every trigger is up, every trigger is perfect, every trigger is everything. And this is the one that new traders, they didn't want to trade because there was a fib on some of the charts. And what you'll recognize is, look at your 13 triggers without fibs, strong up. Look at your 13 range triggers, which would be the same as your 8 range large triggers, still up strong. So the market goes up. All right, so let me skip forward here. Now, I did a trend trade with small triggers going up. This was earlier. I didn't want to go through yet again another trend trade, so we'll just kind of look at it. And then we have to decide, do we have a top in place? And one of the first rules that you'll see for a top is, are the triggers past the fib? And you'll notice we have a stranded buyer up there. And, again, when the triggers are weak on the 13 and not past a fib, and the triggers are not past a fib on the 13 range, usually you don't get another trade. And again, if you do, you can take it as a continuation type trade. For me, whenever we close below all the triggers on all the charts, which the bars themselves. So the 5-1's going down, the 13 range is going down, and the large triggers are going down, and we close below the triggers, and we have a high volume area line there too. We're going short. So, right around the 82, 83 area, call it 84. We'll go 82, 3, maybe 83. And again, 83, 84. And the reason why I do it here and it doesn't quite look like a trend trade is because of the high volume line. So I expect us to tap that high volume line, and then we'll be off to the races. So this is recognizing a good top, strong triggers on the 5-1 chart, below all my strong large triggers. Oh man, we got hit. And again, you know, the idea is that we're not going to get much past that high volume line over there, and or the small triggers that are coming down. Okay. Well, it'll be a traditional easy looking trade if it comes back. And, well, we were right, but we didn't get a fill. Well, that happens sometimes. Anyway, hopefully the logic is pretty easy for you to see. Price bars below all triggers on the 13 range chart. All right, so let's do the other way. So now we have no triggers past the bottom, right? So we have a kind of a pivot stop out on the 13 chart, not that great. Divergence exactly from fibs, straight into sellers, and then now that we have all of our triggers rolling, you know, this is where, you know, if you want to try the momentum type trade to go long, it's important to make sure that your 13 range, or for me, my 13 range triggers are cross strong. Notice I'll put an arrow. And again, this triggers on the 13 range chart move live, and the triggers on the 5-1 chart, because they're synthetic, are a bar behind. But again, after a good bottom and all triggers roll, this is a continuation look that you can use at Fibonacci support with the triggers going up to take advantage of a couple of extra moves during the day. And then now, you know, on our 13-2 chart, strong triggers up past the fib. Notice the high volume area on the 13 range chart. So that's what I'm shooting for. Mid-band on the 5-1, the high volume area on the prior bar. Again, you know, it feels comfortable to have it down here. But you're going to have down bars. Well, I guess it doesn't matter where I put it, does it? It's just going to take off. All right, so we're still going up. We hit yellow 1-to-1s on the 13-2 chart. So now we have to make a decision. Do we want to trade into yellow 1-to-1s on the 13-2 chart? And we guess we had them on our 13 range chart too. So now look at the market flow. See how the market flow is really bearish right there. And that type of bar from a termination condition usually means we're going lower. And you're not going to be able to do a 5-1 trend trade. So we'll see how they go. And again, some people will opt to do this anyway, because we've had a couple of bars of stranded buyers and a very bearish market flow bar, and my triggers are a long way away on my market flow chart. I anticipate we're going down. Now, just because I anticipate we're going down doesn't actually mean that there's going to be a short trade. And this is where a lot of people get in trouble. They try to go short at 06.85. And for me, we just hit a high volume area. So the 13 range to me says do not go short or you will be separated from your cash. So we've got kind of a mixed bag here where I can't go long because nothing says go long, and I can't go short. And again, sometimes you get stuck in these little spots where, you know, again, I guess if you went short up there, it wouldn't hurt you, but you'll see how the 13 range for me kind of keeps me out of trouble, keeps me out of a little bit of a choppy zone, and I'll just wait until everything kind of sorts itself out here. Now, tempted to do continuation long because all of my triggers on the 13 are up, and again, this is, you know, this is where people get in trouble. Look at my 13-2 chart. And again, it's tempting to do, you know, some type of long trade in here thinking that it's going to keep going, and you'll see again, you know, if I was going to do a trend trade long here, which is what we were just talking about, the rules would be broken. So watch here, right click, buy to, and again, for me, my trend trade is supposed to be above the small triggers on the 13 range chart. And you'll see that was below. And what happens is usually you get stopped out on the low tick whenever you do the wrong trade. And if you think you're right, what happens is you get mad. You're like, damn it, I knew I was right. And that 13 range up bar happens, and you're like, you know what, I'm going to try it again if I can. So again, I know I was right. So this has got to be it going up now, right? So what I'll do is I'll just jump back in again. Again, you saw this trade earlier with a good bottom that worked, but look at my triggers on the 13.2. Look at my small triggers going down on my 13 range. So this is not a continuation long. It's going to lose. And again, you don't have to lose a whole lot on a bad trade. You know, maybe minimize some of your loss. And then you're like, God dang it. I know we're going up because my 21-3 chart shows up. And again, this is where just being patient and allowing the market to work itself out. And you're like, whew, thank goodness I'm not long. Right? And again, we're in a situation where we can't really go short because it's not quite right on the 13.2 chart for a trend trade. Because our small triggers are going up and we're above the midband. So now look at what happens. See right here? See how my 13 small triggers are pinching and rolling up? That's going to make the market probably go up. So, you know, this is where you're like, damn it, I knew it was going to go, or darn it, I guess you could say. You're like, let me do it again. All right, come back. Perfect trend trade. And you're like, oh, man. You're like, I knew it. So the market did what you thought it was going to do, but you took the wrong trades, lost a bunch of money, and then you never even got a winner. So the moral of the story is, don't do trades that don't fit your plan, and you'll keep yourself out of trouble. All right, so if now with all of our triggers up and going pretty strong here, see if we can get another little push, and then we'll end up trying to find a trend trade long that comes back to a reasonable area inside of our triggers. Notice the triggers on the 13 chart, the triggers on the 5-1 chart, triggers on the 13.2 chart, every chart. They're all up. It's ideal. So we need a fill. We need some type of entry. 107 even, if we have a little pivot stop out maybe. As we push up, this is going to be a whole lot easier now. All right. Trend trade. And again, you know, when you're looking at a trend trade, you know, I always kind of put the order on. So it's there at the midband. You know, the big debate is, do you want it at the fib at 107.10 or do you want it at the midband? And, you know, I prefer to have it a little bit closer to the large triggers if possible. Again, I think, you know, if you go 107.10 here, it's not a bad idea. Sometimes you get lucky and they actually make it down to the best spot. Again, if you go at 10, you're going to have to risk a lot more money. Because if they make it all the way down to 06.99, you can't have your stop there, or else it's going to look silly. So you have to have your stop out of the way. So if you're not willing to risk more, you either have to get a better entry or no entry. And again, luckily they made it to the fib and the midband. Never seen that before. And now we start to have pivots up. Again, notice the 13.2 triggers are up strong. Notice my 13 range triggers are up strong, large and small. We have a pivot. We have 5 ticks of risk. And, you know, again, I could leave my target at, you see the yellow down bar on the 13 range chart? If I left my first target at the high volume area, there would be a good target, 15 ticks. Again, it's been a pretty strong trending market, so let's get greedy. All right, got a new pivot. Again, just, you see the 21, right? 0721. Watch. If you get greedy, which I'm doing now, and say I want all the money, which is great, I don't mind that, but that would have been our first target filled right there for 15 ticks. Notice that? So, you know, again, with the triggers getting weaker and a potential third divergence on the 5-1 chart, especially with the third divergence being lower than the second, that is going to end up taking us down quite a bit further. Usually a second look, you know, and you can look in the educational material as well as even in my plan, lower divergence with weak triggers on the 5-1 chart is a definite exit. Don't lose money, period. So if it goes, cool. If it doesn't go, that's okay too. But you can see that if we make a couple bars down here, the market has literally died. And again, I don't want to jump out. We're already break even plus. I really, really, really want them to come try and take my money. Because if they can't make divergence down, they're going to go up. So if they're going down, they will make a couple of bars down, which will give me the lower divergence. So I don't know what's going to happen. But I just know that, you know, a couple ticks below that 5-1 reversal bar marker right there, if it does go down, then, you know, and you have to kind of weigh this out. Are you willing to give up a couple extra ticks risk? And the small triggers on the 5-1 chart being below the large triggers on the 5-1 chart, for me, is going to be an exit. And hopefully I don't get the low tick here. But it's a third divergence with a red background, a lower divergence. The rules say, for me, get out. And again, look, we made a couple ticks. We made 4 ticks, so that's not too bad. Still made a little bit of money. Now, traditionally, when you get a third divergence, you can't see it right away. That's why we have rules written. It's going down lower. They're going to stop out the lows. Maybe, you know, they always get to either the 1-to-1, which is the yellow dots on the 5-1 chart, and or the fib. Hopefully. Now, continuation trades for me. I have to have the 5-1 small triggers cross up, or at least pinch and roll and get retested. So the 21 chart says up, the 13 midband says up, the 1-to-1 say up, the market flow on the 13 range chart says up, which is my rule number 1, have to have a signal. There's 2 signals. So my entry rule is really easy. Buy a pullback to support and small triggers going up on the 5-1 chart. That's it. Now, the first part of that is you have to know or have a really good idea that it should go up and be odds favorable for going up. And you'll hear this a lot in the educational room. Pivot from nowhere on the 13 chart, strong triggers on the 21, and you'll get, you know, market flow signals. You'll get 1-to-1s that hold. And should I give up a tick or two? I really want them to get back to the small triggers on the midband. So there we go. We got to fill. Now, remember, we look at it. It's almost the identical trade we did earlier. 107.06, and now we're in at 107.08. So we made 4 ticks last time, which is cool. And now, hopefully, we'll see what happens here. As long as we don't close below all of our triggers on the 13 chart, traditionally the continuation of a trend trade usually happens from almost the same spot as the original trend trade. Number one, you'll see that in our educational material. And then number two, it usually makes it to the fib. We saw, one earlier to the short side, remember? It almost always makes it to the next fib. They go finish the business. So having a target at the 1-to-1s at 0733, that's the short side target. We're probably going all the way up to the fibs if we go up. So what we want to see is an up signal on our market flow chart, make us feel better. We want to see divergence on the low. There's a new pivot so we can reduce our risk. So we've got 7 ticks risk. To make 25 and 35. So we're talking $600 profit for $140 risk. That's not bad. And again, we'll be able to reduce risk again as we break out to the upside, which we just did, and test the highs. I'm probably going to keep going all the way up, maybe even higher. Again, 25 ticks is a pretty good first target. That's most people's daily goal. So, especially you get a white paint bar going up into 1-to-1s, it's not a bad idea to take some money. But again, remember our 21-3 chart says we're going up. That's first and foremost. Might be able to even add on, trend trade add-on if we get one. We won't do add-on here. We'll just be break-even plus, and we'll see if we get our bigger targets like we expected. Sometimes they go all the way back and you give away all your money. If you're unwilling to do that, then, again, you have to ask yourself why. If you look at your 5-1 chart, our small triggers are up. They're above the large. They're above the 13. The smalls on the 13 are going up. We haven't reached a target. Now we have a new pivot on the 5-1 chart, so we can trailer stop up if we want. So now we made 4 ticks on the first one. Oop, there we go. That was quick. And we made 60 ticks total for 25 and 35. So not a bad little run there. And again, that's another good example of continuation. It's going up, your trend trade failed, and you're looking for the rest of that money. All right, so we'll do a little more here. Again, sometimes, you get to your targets and the darn thing keeps on going. Right, so triggers are strong, everything's strong, the 13 range, 13.2, everything's strong. Strong trend up. Sometimes they get to the next fibs. So we need to start thinking about another trend trade here. And again, the reason I'm thinking about another trend trade is because my trend trade entry areas are going to be inside the small triggers going up, which is super favorable for taking one more. The fact that my small triggers are way above my large triggers on the 5-1 chart tell me that I don't have to worry too much about the divergence that's about to happen. It'd be nice if we kind of got past that 1-to-1 first. And again, let's just start it off down here at 34. So, yeah, that's a long way away. And again, sometimes as the market trends up, you have to move them up. So I did move it up to 36, thankfully. Again, this is speed enhanced a little bit for doing education here, but you can see, look at the 13 range right inside the triggers, perfect midband, everything's up. This is 100% perfect triggers. So we've already got a break even in case there's a third divergence. We're looking for Fibonacci targets. Now we just kind of sit back and relax and enjoy the show and hope they make it. Again, notice that there was no stranded buyers on the top of the 13 range market flow bar. Usually when that's the case, they break that high and keep going. So they broke the high. Now with the look of the triggers, I'm reading that we should keep going to the upside. They don't have to do anything. And again, look, we've already been up $200. So my plan says take 200 on the first half, which I didn't because everything is so strong. I'm trying to be a little bit more greedy on this long trade here. I'm really trying to get 32 ticks on the first one and just a mere 50 ticks on the second one. So again, we're kind of stretching out the boundaries of what we're looking for targets, but you know, the nice thing about it is what's in our way? Nothing. So we don't even have to make another full up bar now. There we go. So take 37. Should have left it alone. And now look, stranded sellers on the up bar here. So if they retest it and we get another trend trade, we'll add on. Sometimes they don't give it to you, sometimes they do, but if the triggers are perfect, and especially with some stranded seller retest on the 13 range bar inside the small triggers going up, it's pretty much the mother lode for me, rule-wise. So there we go, move that circle over. Literally perfect. So I anticipate right there it should go up. One-to-ones, mid-bands, triggers, bars are above all the triggers. We got a pivot, so you notice I put my stop below a 13 range new bar down. I know some people like to nestle it up a tick or two below the pivot, but you know, I like to give it room in case they stop out the low by a tick or two and then keep going, because there's no reason for this not to make it. You know, I have a rule that says if you didn't hit something and price bars are still above the 13 small triggers, probably going to make it. So just trying to hang on here. Now we can start to lock in some more money here. And again, if you wanted to take some of your add-on off, great. You know, we kind of called it beforehand on this. You know, it's probably going to make it to the fib. You know, when it says it's going to, it usually does. That was close. Now, do we want to add on again? You know, again, maybe one more, because they usually make it to the fib. Still a perfect trend trade. Oh, man, one tick. Come on. Oh, hit me. No fills. That's rude. All right. Sometimes you have to give up a tick so you make sure you get a fill. That's twice today. Anyway, twice in this lesson, that is. So, not the day. The day takes a whole lot longer than this lesson is, but I just kind of wanted to talk you guys through the way I do it, the way I'm looking at it, and again, look, we retested stranded buyers on the 13 chart. We have new bars up on the 13 chart, so I wanted to trim a stop up. Look, realistically, I could have taken 2 of the 3 off at the prior stranded buyers dots at 81 or 82. But we're so close to the fib, I'm opting to hang in there. And there we go. All right, now we need to get tighter on this, because if it doesn't go, then I'm not willing to give up anymore. Okay, we got it. There we go. Made it to the fib. All right, so next lesson. Here's the top. And again, we have divergence on this chart. Fibs, stranded buyers. It's a good looking top, but there's no short signals because all the triggers are still crossed up on the 13 range and the 13.2 for me. And there you go, it broke. Kind of anticipated. All right, let me clean this mess up. All right, so, you know, again, look, we start to process over. We hit fibs. We have, the first time we had strong triggers right here. 13.2 smalls were above the large. So we'll call that a bad top. It's not a top. And then now this is our next candidate for a top. And again, whenever we get a top or a good top, this is where, if the triggers start to roll, we can do high volume area trades, the HVA trade. We can do trend trades. If there's a lot of momentum, I might cheat and use a continuation look. So this is kind of our drop dead spot right here. If we start closing below all of the 13 range triggers, plus notice we have divergence on our 13 range chart, plus two very bearish market flow bars, stranded buyers, white paint bar down. If this next bar is down, then we should continue to the downside. And you see how the triggers are rolling on the 13 range chart, telling us that the top might have been good. We have divergence too. So we have divergence on both of our 13s. We have strong triggers going down. This fib and mid-band area here, in conjunction with a high volume area. This fits my rules for using the continuation look for a short and the high volume area, which, again, we expect that magenta line to get hit. And then if all is good, the market will go back down. And again, I've got a standard 13 tick stop that I leave in there. Usually that's plenty. If they get that, then it's really just not a good trade. And again, this is where we expect it to go right here from 0825. High volume line, fibs, small triggers down on the 5-1 chart. We get a pivot, we can reduce risk. And we'll see what happens. And again, if you've got a really good top that you can define, and I always like to call it a multiple chart termination top, where all charts agree at the exact same time, you can get away with the high volume area trades or this type of continuation look here. We just got to the mid band on the 13.2 chart. Usually that's the first target area, is the mid band. There we go. So that's $200 a contract. And we have no risk on our second. Probably should have less now. And if fall's really good, they just make it to the Fibonacci support at 107.89. And then that's the end of it. So again, I appreciate you guys being here for this lesson and putting up with me talking my way through it. Hopefully you find it helpful. You don't have to trade these charts. Any chart, regardless, 1300 on Ethereum is what I trade. Some traders trade, a 133 chart on Apple, or, a 13,000 chart range chart on Bitcoin. It doesn't matter what multiples you use of fibs. Just be consistent. And that's what we call bingo, the room's password. So I appreciate you guys being here. Hopefully you have found this helpful. Have a great day.